if you could do a new construction, do interest only, and then it locks in at that fixed rate once construction's completed into a 40-year term that's fixed, fully amortized. And those interest rates are currently under 3% and non-recourse. So it's the best construction loan available in the country.
This episode brought to you by Suites at Madison. Meeting and conference rooms for rent by the hour, week, month, or year. Suites at Madison, where business gets done. Check them out at www.downtowntampaoffice.com. Now, on to the show.
You are listening to the Invest Florida Real Estate Show, covering topics in lending, buy and sell strategies, property management, hot markets, and tips and tools to guide you along the way on your path to real estate success. You want Florida investment real estate talk? You have come to the right place. And now, our hosts, Eric Odom and Steven Silverman.
Hello and welcome to another episode of the Invest Florida Real Estate Show. This is your co-host, Eric Odom, along with Steven Silverman. Steven, holidays are over. We're back at work. It's about to, well, you never work.
Are you ever at work, Eric?
I was going to say, you're on vacation
every day.
You took like 6 months of vacation for COVID, right? That was an excuse to not show up. It's been an interesting year, man. And really, the 2020, it's gonna not a lot of people going to remember it fondly, but it's actually been interesting in Florida. We've had Anna Bozovich on a previous episode talking about the growth in Florida, and we're seeing it every day. We're getting calls from people from out of state, and
people are moving. The metropolitan areas, places like Manhattan, real estate's going down. People are moving, and frankly, there's a lot of pressure here. There's a lot of pressure for housing, and especially pressure for affordable housing. Yeah, the affordable housing. We haven't seen anything really come out of the ground of substance in a long time as it relates to affordable housing. The dirt costs are going up dramatically. And, Anna talked about this. And David Druitt, who we had on the last episode, he talked about it, and he's trying to come up with some solutions, and people are trying to come up with some solutions. The pressure in the state of Florida is not going to stop. In fact, it's accelerating. It's not only COVID, but it's also tax changes that happen that, in terms of being able to write off your state taxes on your federal income tax is causing a very large movement in the state of Florida. We're certainly feeling the pressure. So anything we can do to try to, we're all ears trying to figure out what's the best way to create more affordable housing for folks in an environment that increasingly is not affordable. And one of the primary ways to provide the supply to the demand is to get financing. And so we talk a little bit today about financing.
Yeah, specifically HUD financing. I mean, HUD financing is Affordable Housing Agency. There are some programs that are available for folks that need to or want to get financing for their project, particularly if it's going to meet needs of the community. So this, what we're going to be talking about is going to be a needs-based solution, but I think you might find it to be interesting nonetheless. Stephen, we had a comment here from Daniel Kinney, and he was talking about Focused Acquisition by Augie Bailot, and he'd left a fairly recent review. So this is an episode we did several years ago with Augie, but Daniel came and left us a comment and says, great show, information here. As a new investor, I never would have thought about offering people different options to buy their house. This episode just opened my thought processes to get creative with property investments, among other things. Daniel, really appreciate you taking the time to leave us a comment. That's helpful for us. It's also helpful for the potential guests that we have coming on the show. We work very hard in trying to program our show and bring you good content each and every episode. And when folks are doing research on us and they might not know us, they do look to see, are you guys participating in the comments? Are you leaving reviews on iTunes and whatnot? So if you've not done that already, you're helping yourself. Please do it by go and leave a comment on the iTunes store, or go to our website, the Invest Florida Show, and make a comment on your favorite podcast, the favorite episode. And it definitely helps us, because the potential guests do research us and make sure they're not wasting their time when they come on the show, and they're not. But I mean, you guys help by answering the questions for them as anybody listening. Stephen, is there anything else you want to discuss before we roll in with our episode?
Let's roll into it. Today we have with us Andrew LaSalla. Andrew is a principal at LSG Lending Advisors. Andrew is a lending advisor and he guides clients in navigating the loan process in a simple, transparent manner so that the loans close at the lowest rates and the best terms. Andrew, welcome to the Invest Florida show.
Thank you for having me.
Andrew, really appreciate the time you're investing with us today. It's been a while. Typically, we try to get a multifamily lender on every year to talk about the market, and it's been kind of a weird year in 2020. So we're late in the year, but we can consider it a 2021 overview of the market. Now, you do mostly multifamily and healthcare, correct?
Correct. I do multifamily apartments and healthcare, skilled nursing facilities, and assisted living facilities.
Terrific. So can you give us sort of a 30,000 foot view of what's going on in the agency market right now?
Right now in the agency market, a lot of lenders that do agency and FHA loans, there's so many applications for the 2020 and 2021 year that a couple lenders that I've talked to, they're hiring, looking for underwriters, they're looking for processors, they're looking for analysts. So the demand and the capacity for Fannie, Freddie, and FHA, the lending, is wide open. There's a lot of funds available for these programs.
We understand in our market, I'm sure it's probably across the country, that affordable housing is one of the most challenging aspects of multifamily right now. You guys are actually dealing with a ground up deal, though, correct? That's through HUD?
Correct. The ground up program through HUD is a HUD 221D4 new construction, and that could be combined with low income housing taxing credits. FHA's mission and HUD's mission is to, lend and help out for affordable properties. So they look at those deals first prior to market rate transactions. So for any affordable deals that have any affordable component in them, HUD and FHA looks very favorably on them.
So can you give us a little bit of the criteria that would be needed to do one of these loans?
The criteria needed for a HUD 221D4, a developer has to have experience doing projects that are alike. For instance, if they're looking to do a 200-unit apartment building, has that developer done HUD financing on properties that are similar? Now, if there's individuals that don't have that experience, there's sponsors that are willing to be part of the project so that you can utilize their experience in the project. But whenever you're doing a HUD 221D4 new construction loan, you want the general contractor, the developer, and the management company and the architect all to have experience.
So the odds are really stacked against someone just jumping into the business as a new participant. He really has to hook up with
a team,
with a sponsor,
to put together
a team.
Yeah,
correct. You have to have a team, or you have to have a portfolio of projects. Maybe that you have 100 or 200 unit project that you've operated, managed, and owned, and you have that HUD experience to be able to do a project like this. It's not for a beginner into the process.
And what does the structure of the deal look like, Andrew? What are the terms, interest rates? I mean, it's a non-recourse also, is it not?
Correct. It's non-recourse. The only recourse they have is if there were fraud, and there's some special carve-outs, but it is a non-recourse. They have the lowest interest rates. It allows an interest-only loan that converts to a 40-year permanent fixed rate, and those interest rates are currently under 3%. So if you could do a new construction, do interest only, and then it locks in at that fixed rate once construction's completed into a 40-year term that's fixed, fully amortized, and non-recourse. So it's the best construction loan available in the country.
And what does it look like from inception? Somebody comes to you with a deal until funding. What's the time frame typically?
The time frame for these deals, affordable deals get priority, and they can be done within 7 to 10 months. Normally, a new construction deal takes anywhere from 10 to 12 months from engagement to closing of the transaction.
So when somebody comes to you and they have a project and they have a deal that they want to do, what do they need to position themselves for success in order to get a loan? What should they prepare and how should they talk to the lenders?
What they should prepare for a HUD 221D4 loan, they should have done some background in terms of, is the demand there in the market? What new projects have come on board? A market study could be done showing what the demand is, whether it's for affordable or market rate units in the area, how the economy is in the area, put together a pro forma based on what the current rents are in the market, what the current expenses are based on the comparables and the property type. For example, if it's a Class A property that's, the best in a great market, you want to be able to use those expenses and rents to project on, what the project would look like if it would be feasible.
Do you have folks, obviously a lot of investors that might maybe not have done development before would need help on a market study. Are there approved lists out there that HUD or any of the other agencies would look at and say, any kind of feasibility study produced by these groups we would approve of? Is there anything that exists like that?
There's not a list per se, but there are the lenders that I deal with. We would have a market study. If the pro forma looks good, we could have, and most people aren't going to come to you to do a new construction project unless they done some kind of research or have some kind of information that there's demand. But to be able to back that up, once a borrower provides me with the development team, with a pro forma, I go ahead and have, a couple lenders that's our FHA, Fannie and Freddie Mac approved lenders. I have them put in a model to see if the deal would be feasible. And if it would, then we could go ahead and order a preliminary market study that, would reflect if the demand is there for the project so that the borrower wouldn't, spend too much money on appraisal, architect, all that. We'd want to get a preliminary market study to make sure the demand's there so that we could proceed with the other areas of the project.
And I assume you'd also at the same time need an estimate of construction costs.
Correct. That would be in the pro forma, the construction costs, the rents, the expenses, all of that would be in the pro forma that the borrower would provide.
So changing subjects with you a little bit away from the construction loans into some of the other more general agency loans. One of the things we talk about when we have lenders on is really the oracle of the golden goose of lending in the multifamily is the agency debt. And part of it is because it's non-recourse, but also it's because it has really favorable terms. Can you give us your standard $15 million loan on a multifamily investment? Tell me a little bit about what that structure looks like today. Just Fannie or Freddie, is it?
For example, for a Fannie Mae $15 million project, you're looking at Fannie Mae they have interest only terms that are amortized over 30 years. It's interest only for the first, couple years, or it could be interest only for a certain period. Fannie Mae also has fixed rates of 3, 5, 7, 10, 12, or 15 years that's amortized over 30 years. And currently with the 10-year treasury being at 0.93% today, you're looking at an interest rate at approximately 3.05 to 3.5. And the rate depends on if there's an affordability component, what type of class property it is. Is it A class, B class, C class property? What type of shape is it in? Is there crimes in the area? Is it a great location? Is it Dallas, Denver, certain places in California, or is it in areas where not so favorable, certain places in New York or New Jersey that have higher crime? The rates will be adjusted accordingly based on certain criteria.
Does the size of the project have any influence? I mean, for instance, on affordable, is what is like the lower end number of units that would be considered? And
right, there's like a small balance loan program through Freddie, is there not, Andrew?
Yeah, there's a small balance, under $1 million. I generally focus on projects that are to make it worthwhile in terms of the borrower and the cost, you're looking at $2 million and above in terms of, the projects. And for FHA HUD transactions, because the costs are a little bit more expensive than the agency loans with Fannie and Freddie, you'd want to do a loan that's $3 million and above to make it feasible.
So if someone was going to go into a project, at what stage should they get involved with you when they're looking to finance? I mean, is it before, should they talk to you before they actually find the property and do everything? And would you start collecting information then, or do they contact you only when they've really developed the project?
For example, the borrowers usually contact me, whether they're doing a refinance, they have the information, or they're doing a purchase. They're going to want to gather information like the trailing 12 monthly operating statements, the rent rolls, the current mortgage statement, the most recent rent roll, any HAP contracts, what the management company is. Those are some of the items that the borrower gets prior to coming to me. Especially for a refinance that they own, they'll have that information available, or the management company will be able to provide that information so that I can do an analysis for them to see if it's something that makes sense that they would like to proceed to move forward with.
Okay, so Andrew, if people want to either refinance or get involved with new construction and need to contact you, how can they reach you?
The best way to reach me, I have my cell phone 24/7 if I'm on a call, or even on the weekends if it goes to my voicemail. That's one thing I'm key on, is getting back to individuals within 24 hours of being contacted, usually sooner. But even if they have a quick question, just leave me a voicemail on my cell phone at 216-645-9816, or they can email me at andrew@lfglendingadvisors.com.
Awesome. Andrew, really appreciate your time today. Is there anything else you would like our listeners to know before we let you go?
Just if you have any questions on any FHA or agency loans, if I don't have the answer, I could find the answer for you. So feel free, any question that you have, I'll be more than happy to find out the answer for you.
Terrific. Andrew, really appreciate it. Stephen, anything else?
Thank you, Andrew. Appreciate it. We'll talk to you soon.
All right. Thank you for your time.
And that was Andrew LaSalla talking multifamily construction loans. Stephen, what were your thoughts?
Well, Florida, before the COVID crisis, had a strong natural growth, and that growth is intensifying as people are fleeing the intensely populated metropolitan areas. So financing is going to play an increasingly important, it's always an important role, but it's now more important than ever. And with rates being so low, I think we can expect a lot of new construction.
Well, we'll see. It's always been an issue here in Florida with the affordability. Dirt is not cheap here. And so, the HUD product is an interesting product. Andrew highlighted on, and hopefully we'll have some folks got something out of it that maybe give us some ideas about how to move forward on doing any type of multifamily construction deal. Stephen, other great guests, where can we find them?
The place to go is www.investfloridashow.com. That's our website. Also, download the app on your mobile device and listen while you're on the road or in the gym.
Guys, as always, we appreciate the time that you invest with us each and every episode. And until next time, hasta la vista.
You've just listened to the Invest Florida podcast with Eric Odom and Stephen Silverman. Join us every week for actionable real estate investment ideas, and of course, visit our website at www.investfloridashow.com for more shows and tips on how to earn a cash flow in the real estate market in Florida. While hosts and producers of the Invest Florida Show have no reason to doubt the validity of comments of our guests, we do not warranty their accuracy. Please check with your legal, financial, and tax advisors before entering into any investment. Returns will vary from person to person and deal to deal based on unique circumstances. All information expressed in this show is for educational purposes only. Opinions of the guests are not necessarily shared by the hosts and producers of the Invest Florida show.